Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Registration granted by SEBI, membership of BSE, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. The securities quoted are for illustration only and are not recommendatory. This video is not meant for any investment action or advice. Any examples of stock talked about in this video are only for educational purposes.
A very good afternoon to you. Can't say that it is a good afternoon when it comes to gold prices, but first let's talk about oil as well, because you do have those supply concerns that do remain elevated at this point in time. Do you think that is the key trigger that you're looking at, aside from some of those diplomacy hopes really fading?
Yeah, good afternoon, Nana. Definitely, everyone was hoping for the Strait of Hormuz to be open, the peace talk to have some positive news. The ceasefire extension did add some pressure on the crude oil prices, and we saw crude oil prices trading around $88. But today there is a gap up opening, close to 3% of the gap up opening, and I think there could be a rebound till $95 of WTI crude oil. And that's what I'm expecting, a $5 move from here, because the peace talks are not progressing up to the mark. It's almost more than 95 odd days the war has started, and I don't expect very positive news coming up since it's taking too much of the time. So overall from here, $90 trading right now, it should go up to $95. On the Indian front, 80 to 100, 80 to 50 is a very crucial support. 9050 is the resistance, and we expect prices to move to 300 to 400 rupees from these levels.
And that makes perfect sense in terms of how you should be looking at it as well. But just wanted to try and understand what you think about the higher for longer oil prices sort of picture as well. Is that something that you're at all penciling in there?
Definitely, that is adding pressure to the rupee as well, to the economy as well, and I mean to the inflation as well. So overall, there is a discomfort with the rising crude oil prices. Not only rising, they are sustaining at this level since last 90 days. So it's definitely a sign of concerns right now.
That really gets reflected in the prices as well when you talk about oil as well. That's something that we've been seeing, that jitter as well coming through. In terms of the key risks when you talk about oil prices, right? What are the top risks that make it to your radar as well? Because you do have Goldman that has come out with a note talking about how there's $90 per barrel Brent that they're penciling in with some of those two-pronged risks. So what are the risks that make it to your radar this afternoon when it comes to oil prices?
Right, the major risk will rise with the inflation data. That's the major thing actually. And with rising inflation, there could be no cut in the interest rate. Rather, there could be some point increase in the interest rate, and that could pressurize all the commodities. That's what I feel. So rising crude oil prices is not only a threat to the inflation, it also is a threat to the economy as well.
Absolutely, and thank you so much for helping us out with that perspective also coming in when it comes to oil prices and in terms of some of those rising risks as well. But just wanted to try and understand what you think about gold prices as well going forward. You've seen a little bit of a dip coming in as well right now. Do you think that it's largely on the back of a stronger dollar, or is there anything else that makes it to your radar?
Yes, definitely. The last week was too volatile. From $46.50, it crashed to $43.68. 4368 was a 200-day moving average, and we saw a sharp rally towards 4590 levels from those levels, almost 5.5 to 6% up from the 200 days moving average. But I think overall there is a pressure. The prices in gold, they moved up mostly because of the decline in the interest rate, the central bank buying, and the dollar index. So overall, now all these factors are not making that much of sense. Even the geopolitical tension is not adding premium to the prices. So overall concerns still remain the same. And if the inflation data which is due this week, if rises, there could be rise in the interest rate, and that would add pressure to the prices again. So overall, I don't expect prices in the COMEX to move beyond 4640 levels. That's a very crucial resistance. Downside again, 4440 should act as a support. In Indian market, I feel that the August contract, 1,61,500 is a very crucial and a tough resistance. Anything around this level could be a good level to short sell. Downside, 1,57,500 is a very fantastic support. So I expect prices to range between these 5,000 rupees range.
No, absolutely. And Mr. Somani, going forward as well, just very quickly wanted to try and understand what you think about fresh buys or putting more chips on the table when it comes to the physical market as well. Is that something that you're advising investors for or against right now? Because, you know, there's a lot of volatility that is still very much on the table right now.
Last week when we spoke, I definitely said that there's left the dust to be settled down, and I was expecting prices to come around 1,55,000. In spot market, The prices are trading at a discount to the future, so it makes sense to invest in the spot market at this point of time. Last week, the discount was close to 6,000 rupees. If the discount is similar this week, it makes sense to accumulate gold at this level in the spot markets.
Absolutely, and thank you so much for helping us try and understand that as well. So that's how the picture has changed since last week as well when it comes to fresh buys. That's the word coming in there. Thank you so much for taking time out and joining us this afternoon.